Apple stock is very interesting and I get asked about it on a very frequent basis. This is a stock that is up almost 100% in the past 5 years alone, and it was technically the first American company to reach $1 trillion market cap. However, during this recent market volatility and with some negative news about their iPhone sales, the stock is now down almost 15% in the past year, down almost 35% in the past 3 months, and when you look at their recent high of $233 per share versus their current price of about $148 per share, that represents a drop of over 36%. So what's my opinion on all of this? Is this a great buying opportunity as a long-term investment, or is Apple just a falling knife that isn't going to see as much growth as it has in the past because of those iPhone sales kind of plateauing? Well, we're going to talk about all of that and more in today's video. Let's get started. What's up everybody, my name is Ala and welcome to my world of stocks. So in case you don't already know, I'm not currently invested in Apple stock and I'm actually a pretty heavy Android user myself, so I might be a little biased and you can definitely use that against me in the comment section if you disagree with anything I say in today's video. But the way we're going to do this is we're going to talk about Apple's stock valuation, then we're going to go over their business, some of the cons, some of the pros, and we'll also cover their balance sheet and we'll talk about their future potential. And then at the very end of the video, I will let you know if I plan on buying any Apple stock myself, and I will give you a conclusion with my overall opinion on everything that we discuss in today's video. But starting with their valuation, this is a stock that trades at a trailing PE of just 12 and an even better forward PE of just 10. From that metric alone, I feel that Apple is a little undervalued, but as we all know, there's more to stocks than just PE ratios, so let's keep going. Now their PEG ratio, which factors in future growth, looks very good at less than 1. You always want to get a PEG ratio of less than 1 if you can get it, but believe me, it's not always that easy to get, so Apple coming in here at less than 1, I feel like that's very strong, very good. Now their PS ratio is a little higher at 2.6, and their PB ratio, despite having a strong balance sheet, comes in at over 6.5, but we'll talk about their balance sheet a little bit later. In any case, getting their assets at a PB ratio of over 6.5, it's not very good. They also have some solid margins at a 22% profit margin and a 27% operating margin. And in terms of where they're currently trading, they sit well below both their 50 and 200-day moving averages, and they're very close to their 52-week low, which they just recently hit, especially versus their 52-week high, which they're very far off from. So if I was interested in Apple as a long-term investment, I wouldn't necessarily have any issue buying the stock right here and implementing a dollar cost averaging strategy as it continues to drop, but we'll talk more about that later. First, let's talk about their business and why the stock is struggling, and then we'll transition to their future potential. Now, you guys already know Apple. They make the iPhone, the iWatch, iPad, iMac, the MacBook. They generate a ton of revenue from their services thanks to that entire ecosystem hooking customers in. That's really a lot of synergy within their company, because if you use one of their products, then you're pretty likely to use others as well and pay for any services that come attached to all of those different products, including the App Store, Apple Care, Apple Pay, iTunes, cloud services, and the list really goes on. But as far as the revenue breakdown for the company goes, in their most recent quarter, that being Q4 of 2018, iPhone made up the majority of their revenue at almost 60%. Next up was services at about 16%, Mac products made up about 12%, with iPad at about 6.5%, and then their other product segment that includes things like iWatch, AirPods, and their HomePod speaker, and different things like that came in at about 6.7%. So just to summarize, iPhone sales are a huge deal, making up the majority of their revenue, and the issue here is that unit sales year over year only barely increased by less than 1%. However, revenue still jumped by almost 30% in that segment, and the reason why is because they increased the sale price of their iPhones, which sometimes can go for more than $1,000 a piece. So in my opinion, it makes complete sense that Apple would kind of plateau here a little bit in terms of their iPhone unit sales, because as you increase that price, it's going to be much harder to convince people to buy the iPhone, not only switching over maybe from Android, but also just upgrading your iPhone in general. Now, You could argue that maybe you can get a little bit of a deal if you are trading in your old iPhone, then maybe you get a discount. I don't know how that works because I'm not an Apple user. But we're seeing more people switching from contract smartphone plans and switching over to prepaid plans. And the issue there is that you're not going to be receiving those same subsidies that you used to when you signed up for a contract with like AT&T, Verizon. You see people switching more to prepaid, whereas you're either bringing in your own phone or you're just buying a phone at full price. And if that's the case, you're buying an iPhone sometimes at over $1,000. That's a steep price to ask for. Now, the other issue, and you guys know this about me, is that I use a OnePlus phone. So OnePlus is a brand and they make phones, and their phones are like half the price of iPhones. And they're very good phones. In fact, I use the OnePlus 5, which is like a couple generations old already, and it costed me about $500, and it has 8 gigabytes of RAM. And this is a couple generations ago, and it still has a really good processor, and it's super fast. I mean, I compare it to my girlfriend's iPhone 8 that she has, and my phone just kind of blows it out of the water. It's like, well, not blows it out of the water, but it's a little bit faster. So the point being that there's a lot of these other really good smartphones coming out from on Android's OS, and they cost much cheaper than what an iPhone costs. So I think it's gonna be harder to convince people to sign up for Apple or to get an iPhone at these prices. Having said that, I'm not of the opinion that all of a sudden everybody's just going to leave Apple and just switch to Android. I don't think that's going to happen. I think that iPhones are very good quality phones. I think their services, their operating system is very smooth, very attractive. And people that usually use Apple products, they love Apple products and they love their experience. So I don't question that maybe Apple is better than Android. I know that's like a heated debate. I personally use Android, but I'm not sitting here saying, hey, Android is better than Apple. I don't think that. I think they're both very good for what they do. The issue is that I think Apple will have to work with what they already have, at least until other technologies come online like 5G. I could see 5G pushing iPhone growth in the future, but as of right now, I don't really see many reasons to upgrade your iPhone unless maybe you're getting a deal for trading it in and maybe you get a decent like price cut off of the new iPhone. But I don't know how that works. Again, I don't use Apple. So I would really wait for technologies like 5G to really push iPhone sales further. For now, I see iPhone unit sales kind of plateauing. In fact, the International Data Corporation expects smartphone shipments to actually decline this past year of 2018 by around 0.7% and then only grow by low single digits in the coming years of 2019 through 2022. I'm a little more optimistic than that because of 5G, but either way, it's not a good sign. Add to that the issues that Apple is having in China, and you're set for some major headwinds moving forward. See, the Greater China region alone makes up close to 20% of Apple's total revenue. And the problem is that Apple just issued a warning a few days ago that revenue will be much weaker than they previously guided for the first quarter of 2019 due to weak iPhone sales in China. This decrease in guidance equates to revenue being about 8% lower than they previously expected, which used to be between $89 to $93 billion, but is now much lower at $84 billion. And when you consider that the same quarter a year prior brought in over $88 billion, that represents a year-over-year drop in revenue of almost 5%. So the stock tanked as a result. Now, to be clear, this can't all be blamed on Apple. A big reason for this is very likely due to a slowing down economy in China that is raising concerns globally for many companies and not just Apple. However, if you're looking for added reasons to be concerned, one of their biggest competitors named Huawei, they sell their competitive smartphones for around half the price in China, and reports from Nikkei Asian Review are saying that a growing number of Chinese companies are offering their workers subsidies to buy Huawei phones over iPhones in support of Huawei's CFO, who was arrested in Canada. In some cases, companies are reportedly paying for up to 20% of the price if they buy a Huawei smartphone. It remains to be seen if this will make any impact on Apple's revenue, but at the very least, it's not going to help Apple's situation as they try to sell more expensive phones in a slowing down economy. On the bright side, there is more to Apple than just smartphone sales, namely services, which has grown revenue by 23% in 2017 and 24% in 2018, which is very impressive. Not to mention that their other product segment, which does include their iWatch, is also growing at an alarming rate, posting revenue growth of 16% in 2017 and a massive 35% in 2018. And despite iPhone unit sales struggling to grow, the revenue from them still jumped by 18% in 2018 thanks to those higher ASPs or average selling prices of those phones. Still, I would worry about that revenue growth being sustainable because I think there's only so much that you can raise your prices before you make your customers angry enough to switch. In any case, if Apple wants to keep growing at this pace, then they're probably going to have to make some moves. So let's find out if there are any future potential catalysts for growth moving forward. Well, we do know that there are some heavy rumors of Apple entering the video streaming market to take on the likes of Netflix and Amazon in some way by reportedly spending over $1 billion on original content, which according to IGN has already reached 26 different shows that are in production. But to the scale that this will go is not entirely known other than credible rumors being reported. It's also being speculated that Apple's service will be more similar to that of Amazon's Prime Video, where you can also sign up for other services like HBO, Cinemax, Stars, and so on. So it might be a combination of Apple content as well as others. They already do similar things with Apple TV, but this would be kind of an overall service where you can have all the things in one. As far as the release date and budget, it's being reported that the service may release in 2019, and the budget might reach over $4 billion on original programming by 2022, but currently the budget is closer to $1 billion a year, whereas Netflix and Amazon spend much more at around $7 and $8 billion each. Still, it does look like Apple means business here, spending billions of dollars on this, but their budget is much lower than some of these other big players, and you're talking about a very crowded market with the likes of Netflix, Amazon. You're talking about AT&T entering the market soon after they acquired Time Warner. You're also talking about Disney, who acquired Fox. They've got Star Wars content, Marvel content. You're also talking about Hulu. So there is no shortage of competition and, may I say, heavy competition in this market. So that's a concern. However, Apple's customers are very loyal, and when they sign up for one product or one service, they usually sign up for another one, right? So I could easily see them targeting their own customer base and advertising this new service to them. I don't know how much it'll cost. I don't know if there will be a discount or if it'll be free to people that have Apple products. We don't have any details yet because a lot of this is still rumors until Apple, gives us all the details. But I think that there is definitely some opportunity there to, to dip into that customer base that they already have. The issue is kind of going outside of that, you're going to face a lot of heavy competition. So realistically, I don't really know what to expect from this. Now, there are also some other rumors about Apple doing some stuff in autonomous driving, with some reports claiming that there are as many as 70 self-driving Apple cars already being run in California. And even more reports about Apple working on an iOS type of service that heavily integrates with autonomous vehicles. But much of that is still not confirmed by Apple, so it's difficult to quantify it as a real growth driver, although I do think it makes complete sense to integrate Apple's services into cars with how technologically advanced they're becoming. And even one Apple analyst is expecting for it to become their newest flagship product sometime between 2023 and 2025. In any case, it's clear that if Apple wants to compete in any of these really highly competitive markets, then they're gonna need the cash and the resources to do so, which brings us to their balance sheet. Now, they're currently sitting on over $25 billion in just raw cash, and their current assets is at over $130 billion, with total assets bringing in a massive $365 billion. However, liabilities are pretty high as well, with current liabilities at over $116 billion and total liabilities at over $258 billion. Still, they have a lot of money to throw around if they need to, which is definitely a good thing. But don't get me wrong, that debt is still high when you're talking about accounts payable, short-term debt, long-term debt. Those are all a concern, but they're still positive, by billions of dollars, even tens of billions of dollars that they can use on innovation and investments as well. So in conclusion, I'm a bit torn on this stock, and you can probably tell throughout this video, I would go from pros to cons, cons to pros. And the reality is that I think bears can make some really good arguments right now, and I think bulls can make some just as good arguments, if not even better arguments too. So, I think the stock is a bit oversold at this point when looking at some of their metrics. When you consider how much revenue they're bringing in, this is a company that brings in hundreds of billions of dollars every single year in revenue. So this is a really, really big and profitable company. When we're talking about their next upcoming quarter being weaker and being actually a decline in revenue, I think it's still going to be their second largest quarter in history. So this is still a company that is performing very well. Like, people seem to be forgetting about that. They're acting like Apple is just getting destroyed or they're just going to go out of business. Like, that is not the case, guys. This is a huge company that brings in a ton of money. Not to mention that they also pay a pretty nice dividend that has a yield above 2% and that has seen 6 years of consecutive growth at a double-digit 5-year growth rate with less than a quarter of earnings being paid out. So that dividend is very likely to grow substantially in the future. So you could even consider Apple as a little bit of a dividend growth stock as well. Not to mention that Apple has also been buying back shares at an alarming rate since 2013, and their recent buyback program of $100 billion still had around $70 billion left to go as of October. So with the stock being down so much, you got to figure that they're getting a pretty large amount of shares with that money, and that'll help improve their EPS numbers in the future. But I think in the short term, I think analysts are gonna be focusing on this short-term weakness, and I think they're gonna be downgrading Apple, which may hurt the stock. However, even if you look at a lot of these downgrades that are being reported out there by analysts, a lot of their price targets are still much higher than where Apple is currently trading. So I think we have a situation here where the company is slowing down. We have some issues. I think those issues can be solved. But in the short term, the stock might struggle a little bit. But I also think that the stock is being oversold. So that's like my overall thesis on Apple. If you ask me how do I feel about it, I think this is a company that has some issues. I think they can fix them, but in the short term, there's issues and they're going to be slowing down. But I also think that the stock is oversold. So am I investing in Apple myself? Probably not yet, because there's other companies that I like more. Like, I really like Microsoft, I really like Amazon. I even like Google more than Apple, but those companies are much more expensive than Apple. So, you can't necessarily say that those are oversold because their valuations are still pretty high. But man, you look at like Microsoft and stuff, they're doing so much in so many different markets. Whereas Apple, I worry that they're just a little isolated in terms of their business. They're not very well diversified, in my opinion, but I don't know. It's a tough one, guys. Like I said, I think Apple is a little oversold. I don't see any problem in investing in Apple, but if I was to buy Apple stock right now, I would definitely implement a dollar cost averaging strategy in case that the stock continues to drop in the short term. That way, I just open up a small position. I can add to it little by little, gradually, slowly, over time as it continues to drop. If it drops, I don't know that it will. It might bottom out. Like I said, I think it's oversold, so it might bottom out at some point. But that's the strategy that I would use if I was buying it. And if it continues to drop, I probably will end up buying it, because even just as a dividend growth stock, it's pretty attractive to me. And I definitely think that dividend is going to grow in the future. But anyway, who cares what I think, guys? Let me know what you think. Sorry for going a little bit all over the place. It's, like I said, it's a tricky stock for me to think about. There's a lot of different ways you could look at it. But I hope that you enjoyed the video. If you did, please support the channel. Hit that like button, guys. Lately, you guys have been doing it a lot. It really helps the channel. I promise you, it helps the channel a lot. So thank you for all the support. I really appreciate it. And I hope you all have a wonderful, beautiful day. Leave me your comments down below. Let me know how you feel about Apple. If you're invested in them, I'd love to read all about it. And I'll catch you guys in the next video. Take care. Bye-bye.